Hi, good evening. Welcome to the channel Be Rich with Advanced Trading Strategies. Before I start these sessions, I request all of you to subscribe this channel, and I am thankful to if you are joining to this channel. In our last video, the part 1 video, we saw the best time for option trading. In this session, we are dealing with the importance of specific time slots and the patterns. Certain specific time slots are always generated during the trading hours, which is more profitable and earning time due to this specific pattern which formed during this time. Thus, the option trader needs to understand the pattern of the specific time slots. In this video, we choose the same Nifty graph as we used to discuss in the part 1 video. This Nifty graph is always the live candlestick of 1.5 days from 26 to 27 September 2022. During this period, a successful trader may be able to identify at least 11 specific time slots. The specific time slots are always in V-type or inverted V-types. For simplicity, in this session, we are dealing with the V-type pattern only, and we will discuss the inverted V-type in the part 3 or other videos. It is essential to understand that the V patterns are formed and part of the stabilization over the market speculation. The stabilization over the market speculation we will deal with in another video. And this is very important in compared to the resistance and supportive pattern system. So the trader must have it with knowledge about the stabilization of the speculation and wait for that part. And getting that part, please subscribe this channel now itself, which is just down of this video. Now let us have a look into the graph. As a trader, you can identify 3 types of V-shaped patterns from these 11 different specific time slots. So you may think, what is great about this V-type patterns and what confidential information is there? Let us have a look into that one. Specific pattern can be derived as 3 types. The first, the short right V patterns. Second, the short left V patterns. And third, the parallel type V patterns. So the trader must focus on the relevant patterns and visualize the formation to make the profit and or reduce their capital loss. It is not easy to visualize and predict the V type pattern. While you are exercising more trading, you may be able to see or forecast the V patterns. Every V-shaped pattern has 3 important nodes which we called the SMEs. It is not the SME what you are seeing in the market. Here S stand for start, M stand for middle, and E stand for end points. So the SME structure within the V-shape is an essential key factor for every trader to become more wealthy than the conventional resistance and support region trading mechanism. At the same time, we can classify the V pattern into 3 segments, namely the capital line, the profit line, and the risk line. Let us look at the importance of identifying the capital, profit, and risk lines. The capital line and profit lines are the ideal node points to enter the market with your capital with specified option strategies. I mentioned about specified option strategies, which we will discuss later. The risk line is the trickiest node point. Not the point, the trickiest node point, and an investor must be looked into the exiting point from his trade. And the risky line is the point the trader have to look for the next available specific time slots, and he should not be hurried to do the next trading. He have to be wait and identify for the next well developed or going or coming pattern from the trade session. Specifically, the trader must enter the contract at the node point where the capital line and the S node of the V pattern merge, and which occur in which point. This is the best location to start your bet with your put or call options. The advantage of specific time with V-shape pattern is that you can execute two continuous order in a combination of put or call as a function of either sell or buy. This is possible due to the SME's magics in the V pattern. Let me be very precise. The S start with the capital line, then falls down to the profit line and reverse back to the risk line or stretch up to the capital line in the case of parallel pattern. This will enable the investor to gain 1.5 to 2 times extra profit in compared to the conventional optional trading approaches. Specifically, in the first case, we can consider the short right V pattern, the capital line, wherever it starts. This will fall and touch the profit line and reverse back to the risk line, which will never touch the capital line. This is the scenario. That's why we call it as a short right V pattern. In the second case, the short V pattern, the trader can enter from the risk line and then expect to touch the profit line before it returns to the capital line. Thus, the trader can ultimately exit the trading strategy at the capital line. The trader can earn 1 to 1.75 times higher profit in both short left and short right V-shaped patterns. But in the third scenario, the V pattern starts and ends with the capital line and there is no question of the risk line. Thus, this specific time with the V-type pattern enabled the trader to gain 2 times the profit compared to the short right or short left options. So it is very important to understand the SME cycles by all the investors, those who ever fed with more myths of resistance, support, whatever it may be. Always remember the SME cycle in the V-type pattern of any graph which you are seeing in the Nifty trading. Once the trader identifies or predict the node point of SME with the capital line, profit line and risk line, the next step is to remember what kind of strategy you can implement in each node. So we said very clearly what is SME, what is capital line, what is profit line, what is risk line. It is nothing but the node which forms the actual potential area which can be considered by the trader to execute his or her options for maximum profit. Don't forget it. So the SME cycle's importance must be understood by all investors. Once the trader identifies and predicts it, he can move with his options. So the node is the S node is an excellent choice for put to buy or call sell. Don't forget, put to buy or call sell, nothing else. At any reasonable strike point, he can execute it. If he is having less capital, he can choose put to buy. If he is having higher capital, he can look into the call sell options. And the next part is the node M. The node M is the second point the trader must have to book his first profit by exiting from the contract created in the S mode. You exercise one option contract which may be a put to buy or call sell from the S node, you have to exit from that. You have to book the profit. At the same time, in the M node, it is equally important to exercise another set of an option which is exactly opposite to the contract exerciser in the S node. If you put a buy order or sell a call order, you just reverse it. There it should be put sell or call buy. And never forget, in M node, it must be a put sell or call buy. You can enter at any reasonable strike price. It doesn't matter, provided that there is a movement and there is a buyer and seller. In the second and the last, the node E, that is a very very important and very very critical junction. A trader must have to be very vigilant enough. The trader must have to be exit from his contract which he created from the M node. And this is the junction the trader is able to get 1 to 2 times of the profit. Once the investor exit all contract, his next job is to predict the next available specific time slot which he can comfortably trade and make more profit. In a day, in an average 3 to 6 or even more specific time slots with V-type patterns can occur. So 1 or 2 ideal and best specific time slots with any kind of V pattern is sufficient for the trader to have a reasonable profit or more profit. So thus always remember the time SME cycle for better option trading. So once you understand what is SME, what is capital line, what is profit line, how it is important to make profit, now the another aspect is coming. There are 2 more important parameters you have to understand. The first one is the time and the second one is the depth of the V pattern. The time indicates how much time it takes to form the V pattern. Specifically, the time required to touch the Nifty from the capital line to the profit line and from the profit line to the risk line or the capital line. The second term, the depth. The depth indicates the maximum fall of Nifty from the capital line to the profit line or the total rise from the profit line to the risk line or the capital line. Whichever is higher, that part we will call as the depth of the graph. In this case, first case, the short right V pattern, we can see that the time used to reach it from the capital line to the profit line is much larger than the time taken from the profit line to the risk line. There are 2 segments. One is the capital line to the profit line and the second is from the profit line to the risk line. So thus the trader has the significant time, about 10 to 15 minutes to book his S node profit. That means the time took from S node to M node, 10 to 15 minutes average he is getting. But for exercising and exiting from M to R, means M to E, the time is very less, 3 to 5 minutes. The trader have to be very cautious to exit his trade at fast. So in this scenario, the S node entry is the best place to earn more profit and risk free in compared to the M node entry, and it has a high risk and a short time. But in the second case, the short left V pattern, the time is almost the same which we can see here, but the important factor is that the depth is different, which is just opposite with the first case. In the second case, the short left V pattern, the M node entry is the best place to earn more profit and less risk in compared to the S node entry, which is very high risk and you may meet a very short time to exit from the contract. But in parallel shape entry, both S node and M node entries are equally potent for earning good profit. But getting parallel edge V shape in micro scale may be very difficult, but in long term you can see multiple V shapes, but we cannot suggest the option trading with the V shape for long hold. I personally never do that. So you have to understand one thing: every SME strategy, the time, depth and the pattern is equally important. A trader must have to have the analysis skill to forecast the V-type pattern using the speculative time and the stabilizing moment to predict it. Don't try to depend more on resistance and support. Many of the traders are losing their money while analyzing the candles with resistance and supportive mechanism. So this all information is only for educational and informative purpose. We are not responsible for any loss or gain in any investment you are going to make. You can analyze the theorems what we teach here. You can look into the graphs. You can establish, and if you are able to catch it up, it is appreciable. Try to do the trade very cautiously and judiciously. Don't lose your hard-earned money, and happy investing. Before I close this video, I am requesting all of the individual traders and investors to support us in terms of subscribing this channel. Thus, you may be able to get the next newly developed advanced option strategy from this channel. Thank you very much for watching this channel. Be rich with advanced option trading strategies.